It's all about one fresh idea, a global end-to-end insurance platform covering the entire chain of interactions, opening a window onto the world of trade. It's about swapping risk for opportunities, from constant needs to a seamless routine, from manual work to automated workflows, from jarring issues to smoother business. It's about giving yourself time to look up and see the opportunities right in front of you, to be able to think, to decide, to be where you're needed, to focus squarely on what's important, your business. Tinubu is about multiplying your opportunities, your connections, and your performance. See all the routes and possibilities of global trade and confidently take the one that suits you. Tinubu.
Good morning, good afternoon, and good evening. I can see people have dialed in from all around the world today, from the USA, the Middle East, Africa, and even those in Singapore who have dialed in very late to join this exciting live stream. Based out of London in the TFG studios, I'm Dipesh Patel, editor at Trade Finance Global, and we're about to go live with our new webinar, Launching a Credit Insurance Venture, kindly sponsored by Tinubu. To those of you who've tuned into our webinar, please keep letting us know where you're from. Please ask questions and we'll try and answer those questions through our panel and keep the session as interactive as possible. So, credit insurance, it impacts our daily lives in more ways that are immediately evident. It's a risk mitigant, a capital relief tool, protecting businesses, driving trade, and enabling markets. But as an industry, credit insurance is incredibly niche. Today, we're exploring the unexplored, how to set up a credit insurance venture. Because on the outside, the continued growth of the industry, the perceived profitability, and the resilient model of credit insurance, coupled with huge advances in great technology, make it potentially attractive for entrepreneurs to enter into. But I'll stop there, because I'm excited to welcome our panel of experts to discuss the current mega trends in credit insurance, the managing general agent or MGA model, the highs, the lows, the ups and downs of starting a venture in this space, and what we can look forward to in the near future. To our viewers, once again, please do submit your questions via LinkedIn, X, Facebook, YouTube, or email us, and we'll try and ask as many of those questions as possible throughout the webinar. Please welcome Stuart Lawson at Aon Credit Solutions, Mark Mayer at Tinubu, Carmine Mandola at Kofas formerly, and Crediarc, Tobias Povell at Score. Welcome to Trade Finance Talks. And to start off with quick introduction, who are you, where are you from, and what do you do? Carmine, I'll start with you.
Thank you very much for this invitation. Hello, the panelists, and hello, everybody that is following this webinar. So briefly, Carmine Mandola. So I had a long experience in the credit insurance with Crediarc and Coface. And I had also the opportunity to have an experience in different sectors as a CFO and CEO. So let me say that I understand the credit insurance sector by inside and outside. So by inside as someone that suggests credit insurance to the company, outside as someone that used to buy as CFO the credit insurance.
Thank you very much. Mark Mayer, introduction to you, please.
Yes, thank you, Dipesh. Thank you to everybody. Hello, the panelists, my colleague, and the people listening to us. My name is Mark Mayer. I've been working in the industry for almost 3 decades. First within the Trade Credit Alliance, which was at the time Euler Hermes. for 15 years. And 15 years now, I've been with the Tinubu, which is a software solution for trade credit. Mostly my role is mostly dealing with insurers. So I got an experience now for these 30 years in the business, which is, as you say, quite a niche, and from the system and service to be provided to our customers.
Thank you. Tobias.
Thank you, Dipesh, for the invitation. So my name is Tobias Povel. I'm working in this industry for something like more than 20 years now. I started in the industry as an actuary, as a pricing actuary, and then I got to be introduced into trade credit insurance, which I'm doing as an underwriter on the reinsurance side now since 2007. I'm based currently in Zurich, Switzerland, and I'm heading the credit surety and political risk treaty team for SCOR Global P&C.
Thank you very much. And last but not least, Stuart, over to you.
Thanks, Dipesh. And again, it's a pleasure to be on this panel. As Stuart Lawson, I'm based in London, but have a global role where I lead Aon's credit solutions business, which primarily consists of kind of three key pillars: our short-term trade credit, our structured credit and political risk, and our commercial surety operations around the world.
Thank you very much. So we're going to structure this webinar in 4 different parts. Firstly, looking at a market overview to credit insurance and also exploring the MGA model. We're then going to jump straight in and discuss some of the key considerations for entering the credit insurance industry. Then we're going to deep dive and look at 2 very exciting case studies: SBI General Insurance and Cartan Trade. And finally, look to how we grow the trade credit insurance. Where do we go next? So first of all, a quick introduction. Carmine, perhaps you could start, given your experience. Can you give a brief overview of what the credit insurance market looks like right now?
Sure. Let me say that the global credit insurance market is experiencing some change. In fact, key trends include modest economic growth in major regions like Europe and advanced economies, which have been impacted by tighter credit conditions, as everybody knows. And so some credit insurers are cautious due to the market volatility, which is also affected, as everybody knows, also by the numerous conflicts around the world. But on the other hand, when we are talking about market volatility, we need to put in evidence that the companies need protection from the risk of non-payment by the customers. And so this is why the credit insurance market is expanding globally with a projected growth rate of 7% annually from 2024 to 2032. So 7% annually is very, very interesting growth rate for this market. Another major development that I would like to put in evidence is the increasing of the integration of the current technology in the credit insurance market, particularly the use of the artificial intelligence solution, which allow for more efficient risk management through automation and enhanced analytics. And this is a very important point. I see a lot of developments in this field.
Thank you very much, Carmine. So just a quick summary. In a market where we're seeing modest economic growth with approximately a 7% CAGR between 2024 and 2032, as we need to continue promoting and providing services for the risk of non-payment, and also in a world where the industry is embracing new tech. We've seen the rise of new AI. So a very good summary there. Stuart, perhaps you can weigh in here. Can you explain the managing general agent or MGA model and how it differs from, say, traditional insurers. And considering that MGAs are seemingly growing in popularity, what are some of the benefits that this model can offer?
Sure, Deepesh. Good question. And again, just maybe before I kind of go into detail, it's worth kind of noting that the MGA is not exclusive to the kind of credit world. It applies to a number of different areas and classes of insurance. But as the name refers, I mean, a managing general agent, it is an agent that's acting on behalf of an insurer, a syndication or syndicate of insurers, or potentially alternative capital providers. So in practice, what does that actually mean and why is that different? I mean, effectively, what the MGA is providing is expertise, resource, infrastructure and operating models that allows the insurer to deploy its capital. Why is that becoming more popular is that sometimes if you've got a business that's looking to kind of move and enter into, say, let's say the credit insurance marketplace, the initial investment costs can be extremely high and very difficult to kind of put in place. So by accessing that, you can enter that market relatively easily using expertise. It also allowed you to diversify. So some insurers may have primary operations, but decide to use or back an MGA to access maybe a different product, a different region, or a different segment.
Thank you very much. And Tobias, perhaps you can also talk to us about what you think is behind the recent increase in MGAs globally, and why do you think now is that time? Are people really using the MGA structure to build on that expertise, resource, infrastructure, and operating models that Stuart alluded to?
Mm-hmm. Yes, thank you, Deepesh. I personally, I believe there are a couple of elements to answering this question. I mean, the first one, which I guess is kind of obvious, is that this line of business has been proven to be very attractive in terms of the underwriting profits it can generate. And that is obviously appealing to newcomers. It's a line of business which is where you actively underwrite the risk. So it's not that you write a risk and then you hope for the best, but it is a line of business where you actively underwrite and manage the risk. And I think this adds to the high profitability for this line of business. I believe the second element in relation to this emergence of MGAs is that there is a perception that this line of business, even in mature markets, like or what is considered being mature markets like in Europe, there is still a very significant segment of the market which is untapped. I'm thinking obviously about the SME market, but also maybe other potential buyers of this form of insurance. Obviously, if we talk about emerging markets, this line of business is at a very early stage of its development. And then there is also an element, I believe, in Europe, which is related to post-COVID, where I think there was a perception that capacity from main players might be scarce. So it could be a good opportunity to enter that market. Last but not least, and it has been already touched upon by Carmine, is the advances in technology. And I think this is significantly bringing down the barriers to enter this line of business. I think we're going to talk about this later in the course of this discussion.
Thank you, Tobias. So just to summarize, it's a profitable sector. It has the capability to generate good returns, as Carmine alluded to, something that's growing, an industry that's potentially predicted to continue to grow at around 7% per year. It also has a very good untapped potential, particularly in the underserved areas of the economy, emerging and developing markets, small to medium-sized enterprises, and as you said, the rhetoric following COVID, including some of the previous webinars we did with Tinubu over the years, to say capacity is scarce from some of the main players. Let's talk a little bit more about addressing the technology problems, and I will ask the technologists here. Mark, digitalization can make processes more coordinated, accurate, and quick. Can you talk about some specific benefits that come from digitization within credit insurance, perhaps not only from artificial intelligence, but also some of the technologies that we know we've been talking about for several years, particularly when it comes to the credit decisioning and that credit decision-making process.
Just a preliminary note and rebound on what Tobias said. The trade credit activity is not just an insurance, it's also mixed with a lot of service, and the go and fro with brokers, with insurer or third parties is pretty heavy. So when we think digital, the very first reflex is to think about automated process and flows of information with the different stakeholders of the activity. So that's, I would say, basic, but that's why technology system were very difficult to get, very heavy in terms of investment, and it was, as Tobias mentioned, a barrier to enter the market of trade credit. Today, Tinubu has been developing a platform, which is a vertical platform, which is I would say the plant to produce the trade credit, plus all the portal and the communication tools for the ecosystem. We are able to get these automated processes. Of course, it's very accurate. The capacity we have now is to get linked with the communication like API, which is automated and embedded communication with different ecosystems, partners, banks, or others, which was not the case before. You have also, I will say, the element which is very important today of governance and tracking to avoid any fraud and things like that. So basically, the digitalization is obvious. And if we talk about AI, which is the buzzword for the couple last years, AI is coming in. The obvious one where everybody is looking at is the risk assessment, which is very important in this industry. You have to understand what is the soundness of the customer, of your customer as an insurer, which is the last risk. But also we have some elements. We've seen a couple of insurers have developed also for their prospecting, canvassing. They use profile where they have customers, they look at the profile, they use this known profile to get new customers. So it is spreading. AI is not going to change dramatically the world of trade credit because algorithm and knowledge was there, but because it's more powerful, give more speed, able to manage and to handle huge amount and volumes of data, you can do it faster and very secure. And that's where the technology is coming in. I think it's one of the two pillars of trade credit. You have this, and you have the expertise and the knowledge of the people. And then you have the insurance, which is insurance or reinsurance, of course, which is very important. But to set up a new venture, techniques and the knowledge are two very major elements of the trade credit.
Thank you very much, Mark, Tobias, Carmine, and Stuart, for really setting the scene. So to summarize, we're in a period of moderate economic growth, and it seems like the appetite to explore trade credit insurance is potentially not only a profitable venture, but also something that has the ability to address the $2.5 trillion trade finance gap. And there are lots of exciting new technologies and also existing technologies that can be utilized, such as APIs and AI, to assess risk, to provide governance and compliance. And actually, that's what credit insurance really is all about: underwriting risk and taking fairly calculated risks, to Stuart's astute point earlier. And according to Schumpeter, the definition of an entrepreneur is an individual which innovates when they introduce something new in the market, either a product or a service or a method. Although Schumpeter recognizes that a substantial part of these innovations imply a recombination of some of these existing elements. Sounds too good to be true? let's now talk about the key considerations for entering the credit insurance industry. And Carmine, someone who's done it before, of course, I'm going to start off with you in this section. So, Carmine, imagine I am new to credit insurance. What makes it interesting to enter the market from an entrepreneurial perspective? Perhaps you can talk about some of your history here as well.
Yeah, sure. Thanks for this question. Entering in the credit insurance market as an entrepreneur, in my opinion, offers several opportunities. So the first one, which I mentioned before, is the growing market. So there's a market is growing, so 7% of projected growth rate is very interesting for the next 8 years. So you have a very high demand, and the company need protection against the non-payment. So this is why it's, as an entrepreneur, it could be a very interesting market. The second point that I mentioned also is the innovation. So with the artificial intelligence, you can help business to put in place some mechanism to make a better risk assessment and improve the underwriting accuracy. And I imagine that Tobias and Stuart are very interested in these two points because they are really involved on that. Another point is the fact that you can have a big and diverse client base, because with credit insurance you have a wide range of sectors and industries, and you can have also different kind of size of companies, and this is also it's interesting as a client base. Another point is the growing of a cross-border trade. So you have a lot of companies that used to sell goods and services to other companies. And so when you have the global trade expanding, particularly in regions like Asia Pacific, Latin America, and Europe, the businesses require protection against international trade risks. And so credit insurance is there for that. And the last point, which is also very important in my opinion, is the opportunities to build a value-added business. I mean that the credit insurance can offer new services as risk consulting, trade credit analysis, or portfolio management. So it's another opportunity to make business for credit insurance. If I want to summarize these points, the credit insurance market is a growth industry with a mix of innovation potential, client diversity, and global relevance. And all that make it exciting space for entrepreneurs.
Thank you very much, Carmine. I mean, look, we've heard about it from the perspective of the insurer, but what about from the perspective of the beneficiary? There's Stuart, representing a broker here. What's the client benefit?
Thanks. And maybe I'll pick up on some of Carmine's points, actually, because I think they're relevant to answering that question. And first, I mean, I've been in the industry over 30 years, and I always start with the kind of client need and client value. And I think what has been interesting, the product itself sometimes looks relatively simple, but the application of how you can use it can cover different areas, whether it be, what most people think initially is the kind of credit risk transfer, but then you've got underpinning credit management, you've got access to funds, you've got facilitating trade and penetrating new marketplaces. So the product itself can be applied and has numerous benefits depending on your client profile and also your objectives. But when we think about coming into the market, what does new entrants bring to the client? I think you've got to focus on those kind of core requirements. I look at it as bringing in new capital as well, because if you can bring in new capital and new capacity to the marketplace, it does provide that client the ability to trade, especially if we see key concentration risks as well. I also think it brings a level of innovation to the marketplace, because if the marketplace stays too static, it sometimes lacks the ability to change and evolve with the kind of changing and evolving needs of clients. So I think that's really important. As new entrants come in, they are looking to create opportunities, which I think in itself creates a catalyst for innovation and I guess new ideas coming out of the industry.
Thanks, Stuart. Mark, I know you started talking about this earlier, but would you say the potential for SMEs or regionally developing regions in and around Africa and the Middle East, there is potential for credit insurance to continue to grow and create the market, bring in capital and capacity?
Yes, indeed. Actually, if you look historically, trade credit was founded or created last century between the two world war, mostly in Europe, continental Europe, and it was developed later on. As Stuart mentioned, for I would say half a century, there was no very big innovation in the industry. The product is very simple. The principle and the items of the product never change. Technology help and information also help to boost the matching to requirements of the customer or to create new tools to push them to the market to show that actually there was something interesting. And if we see and look at the market where the penetration was higher, it's mostly today Europe, UK, a bit of Asia, and North America, and all the rest of the world was pretty shy on this product for different reasons. Public organization, multilateral organization find out, and governments find out that the cornerstone to develop the industry and the economy in each of the countries, especially the developing ones or in place where trade credit was not there, is to boost and to support the SMEs. SMEs are tiny, weeny, maybe entities, but they make altogether the soundness and the volume for the development of the economy and the trade. And to support these companies, the most easy way is to bring them secure trade. The trade credit can be used also as a support or as a guarantee for financing, either private banks or multilateral banks or development banks. And that's where most of the new venture in, I would say, outside the OECD zone has been created for the last period of time. And that's where there's still a lot of room to develop this. And we see every day at Tinubu new project where either public company like ECAs or private insurer or MGAs, whatever the format is, to support a new segment of the market and mostly and primarily SMEs. And actually, we see the same part of SMEs being the driver for project also in Europe. Because that gives you a soundness and a large basis for your portfolio as an insurer.
Thank you very much. I mean, Mark, should the impetus just be on the private market to address, say, those non-OECD countries? Should, what's the role for multilaterals and governments? So Mark, I'm going to ask you first, and then Tobias, perhaps I'm going to ask you to weigh in.
I would say that the multilateral organization, financial, like the World Bank, local, regional place, plus governments are the driver for place where there's a real need to support and to develop, I would say, the developing countries for sure, where the private institutions are a bit less in the movement, or they are looking to multinational customers, and part of the business is done in these countries. So the driver today, I would say, is the multilateral and government, so public sector, ECAs, where we see this, it's a numerous numbers of projects, small ones, obviously, because it's a starter. Sometimes fighting against existing financing tools like a letter of credit, which is very well spread and developed in Asia, very cumbersome, pretty expensive, where trade credit is cheaper, easier, but there's no culture. So you have to push this. And we see this in the regions where trade credit was not there. The main argument and the main motive is to support the SMEs. So that's where we see the big move, I would say. It's a small part of the market because we know that the market today is controlled by three big group, up to 70%. But every new project in the outside OECD is mostly this kind of profile.
Thank
And
you.
that's the side we see from our perspective, which is a software provider, of course.
Tobias.
Yes, I mean, not a lot to add from what Mark has already elaborated on, maybe just a couple of points. I mean, let's say, in mature economies, typically the governments, as it was explained by Mark, are classically involved through ECAs, and here we talk typically medium to long-term type of risks. But I think what Mark is mentioning here, the last point in terms of emerging markets, and prevalence of let's say LOCs and so on and so forth, is interesting in the sense that I think in these markets, governments can play a role to establish also short-term trade credit insurance type of practices. I'd say establish, and then obviously there should be a role for the private market to play. But it seems to be pretty clear, that if you look at Asia Pacific, for instance, and a very large amount of trade still being secured by LOC, a priori there should be a significant potential to substitute this eventually by classical trade credit insurance type of products. And I think here clearly governments can play a role in promoting this type of solutions. Maybe I can add also an element where I think interventions of governments should decrease for the industry, and this is in relation to maybe more mature markets and in relation to the public perception that this line of business has the ability to aggravate systemic economic crises. And this is in relation to, trade credit insurers cutting credit limits in a very abrupt and sudden way, and decreasing their capacity, thereby aggravating an economic crisis, and then asking governments basically, I'm oversimplifying, I know, but asking governments to step in. And I think there are good reasons for that to occur. I mean, I personally believe that the backstop schemes, which have been established in many European countries in the context of COVID, have a priori were justified. But I think the private industry has to be very careful not to over-rely on governments stepping in such situations, because it's not adding, let's say, to the positive perception of this line of business and to further grow the market in that sense.
Thank you, Tobias. Carmine, question from the audience, because we've talked about removing some of those barriers to entry. I still think it's going to be very hard for many new market entrants to join. What are some of the biggest challenges that persist for entering the industry? And also part two, how do you go about raising financing to cover some of those capital costs?
Okay. Well, there are a lot of challenges, to penetrate the credit insurance market. So let's put in evidence the first point that I have in mind. The first point is the regulatory complexity. The credit insurance market is an industry which is highly regulated, especially in cross-border markets, where the rules can be different country by country. So for me, the solution, let me allow to put in evidence some solution that I have in mind. For this point, the company can make some partnership with local experts, with consulting legal advisor, hiring people that knows very well the market. All that can mitigate, let me say, this challenge. Another challenge, which was already put in evidence by Mark, is the market saturation and the dominant players. In the credit insurance market, we have 4 big players. I don't know if I can say the name. So let's say Allianz Trade, Coface, Atradius, and AG. So they are the most important players. And these giants, have a strong brand recognition. They have a large networks. They have a well-established customer basis, and it's difficult to compete with them for new entrant. But what they can do, the new entrant, they can targeting some niche. They can focus on specific sector. They can focus on region that are not really covered 100% by credit insurance. So they can try to avoid at the beginning to compete directly with large players. For example, they can be specialized in insuring startups, or they can be focused on emerging markets like Africa or Southeast Asia. So this can be something that can help them. Another challenge is the capital intensive nature. So, the credit insurance is a capital intensive business. Not really at the beginning, but you need to put some reserves to cover claims that they can come, especially if you have events of large scale defaults. So you need to be ready for that. And for a new entrant, it's difficult to have this capital at the beginning. So the solution can be that the entrepreneurs can start offering niche services or small scale products which require lower capital reserve. Or they could consider forming a partnership with large insurance or reinsurers as a score in order to share the risk. Another point is the data risk management. We said before, so you need to have accurate data in order to make a risk assessment properly. New companies, for sure at the beginning they don't have this database. They have a lack of access to extensive data that are absolutely necessary to make an accurate underwriting and risk and management. And so what they can do, they can make some partnership with data providers, or they can integrate, we talked about that, artificial intelligence driven analytics tool that can help them to make a better and more efficient analysis about the risk. And for sure, Tinubu, they can help those new entrepreneurs with a very good risk underwriting service, which I know. This is why I can talk about that. The last point is the trust. The credit insurance rely heavily on trust. New companies can find difficult to have a trust from companies, from reinsurers at the beginning. So the solution can be that the new entrepreneurs can offer very good customer service. They can be very transparent in when they offer product. They can put in evidence everything, so not to hide some points. That this kind of approach can help them to be more efficient and to gain the trust from the market. And another point can be also have an alliance with some brokers as Aon, and this point can help a lot them in order to earn trust from the market.
Thank you, Carmine. Stuart, do you agree? Do you disagree to some of those barriers and solutions? And from the broker perspective, what do you believe makes a kind of strong value proposition for this market?
Well, I think I agree principally with all the points that Carmine mentioned. To put succinctly, I think if you look at what are the values it brings, I think I focus on a number of areas. We talked around expertise. So what are you bringing? What is your point of difference? Do you have an industry specialism? Do you have a regional specialism? What is it you're bringing that is different to the current market? I think we've touched on capacity and bringing new capacity and capital to the market. So I think that's important. If we're just moving capacity around, I think it has less value from a client perspective. But if we can bring new forms of capital into the market, I think it again creates huge amounts of client value. And I kind of use the final word, I kind of talk about agility to cover a number of different areas. And being agile for me means being flexible around how businesses are changing and evolving. And we talk about digitalization in terms of the insurance market, but we also got to appreciate our clients are changing and evolving as well. So how do we kind of cover different forms of credit risk that may appear on their balance sheet, or how do we help them realize new opportunities that may exist in new segments, new markets because of product innovation? So that agility for me encompasses both flexibility as well as innovation.
Thank you, Stuart. So Mark, I know Tinubu have recently launched the white paper entitled "Launching a New Credit Insurance Venture." I guess, which we will flash on the screen so that our viewers can download and read that. But for those that to summarize, how can new credit ventures perhaps make best use of Tinubu's offerings? Because I think Carmine's given you a wonderful review there.
Exactly. Yeah, thank you, Dipesh. Actually, Tinubu is providing what IT people call a vertical software, as I say previously. So you have the capacity with the software, with all the module, to run the business. You turn the key and you can go for it. The dilemma of an insurer or an MGA which starts in this business would be, and actually an existing one too, would be, shall I build it myself or buy it? I think, but I'm not totally neutral on this. I think that the fact to buy it to an expert in it gives many advantages. The first one, you have a ready-to-be-used tool which has been run through different other stakeholders, capacity to be customized, to be configured, to be adapted. You have less risk in terms of delivery. Basically, Tinubu, when we go on a project, we're able to give more or less with a couple of months the date of the go live, and we always actually deliver at the right time. The cost is known also, because once you have been looking around the requirements, specific requirements in terms of market, product, organization, we are able also to deliver these correct elements. So you are secure in terms of budget, in terms of planning, and then you have something which has been already used somewhere else by different stakeholders, and you benefit from a kind of a best practice, best process, anything. And on top of that, of course, we have a software and a product that to evolve is upgrade. We bring in a new technology. We have a lab to do that. So it's I won't oversell it, but I think that's the right product, the most secure, the most cost efficient to start the activity when you're starting from scratch, or if you have or you want to change and to revamp your system. That's the way we can do it.
Thank you very much. So that concludes this section on key considerations for entering the credit insurance industry. Quick break, and we ask you, the audience, to continue posting your questions, which we will pose to the panel. So now on to the next section, which I'm personally most excited about, where we'll be exploring some of the case studies. Let's jump straight into it. Tobias, tell me about SBI General Insurance. Perhaps you can start by even setting the scene for us.
Thank you. SBI General Insurance is a case which started when I had the opportunity to spend a couple of years for SCOR in Asia Pacific, being based out in Singapore, to start a practice for credit surety, political risk for SCOR. And so being placed in the region, talking with my colleagues, on the P&C side, who are there on the ground, it is you learn very quickly, that the trade credit insurance, the way it is done in many of these markets, or it has been done maybe in many of these markets, was by way of fronting schemes. So in other words, you have a local insurance company who has a brand, who has a network, but they do not necessarily, or they do not have the expertise to underwrite this type of business for all the reasons which we discussed about the last 30 minutes. They partner with a well-established credit insurer, and then they try to sell this product in their markets. So this is a model which is fine. There's a priori nothing wrong with that model. But personally, or we at SCOR, we were of the opinion that if you really want to own a product, if you really want, and then through that ownership also further sell it and penetrate the market, you need to, or maybe I can rephrase, if you want to really penetrate a market, you need to own that product, in the sense that you need to have the expertise and build the expertise to underwrite it and to service this kind of service the client and the product from A to Z. And this is what we were trying to do together with Tinubu, in terms of the system which Tinubu would provide, some of the expertise they would provide on the risk underwriting side. And then we came across, through our contacts, which we have locally in the Indian market, with SBI General Insurance. And we had various talks with them, exactly along the lines which I was just mentioning. Obviously, from a reinsurer's perspective, we very much liked SBI General Insurance, for instance, because of the network they provide, because of partnerships which we had with them for other lines of business, and the potential which we saw in them and in the market. And then we were able to come to an agreement together with SBI, with Tinubu, and with SCOR, providing reinsurance capacity and also any kind of expertise which we could provide to them. And we are still enjoying this partnership with SBI, and it's been an exciting project to work on.
Sounds very exciting indeed. Mark, is there anything you wanted to add to that? And also, perhaps you can talk to us about Cartan Trade.
I would just, yes, indeed. I would just add something regarding SBI. SBI was really the fruit of a very close partnership with SCOR at the time. And what we designed was kind of unique, and actually I haven't seen it since, where we were able with SCOR to bring the capacity, which is the reinsurance treaty, in the same time to secure the reinsurer and the new practice at SBI General, the system, plus expertise in terms of one or two of the craft, which is the risk underwriting and the commercial underwriting, where we were able to plan a kind of a transfer of expertise to a team where you are the team leader who's still there actually, who knew the business, and having some rookies who were able on a pre-plan and with real dates and milestone to get the expertise by practice through the system. And now they are fully, for ages now, for many years, they are fully independent. They own the business. They use the system, and we are still in this venture. We are very happy, and I think it was quite of a big success, especially bearing in mind the difficulty of the market at the time, where there's been huge restriction in India. And now they're making this very well and work pretty well. So that was a very exciting project, and it's still a very exciting venture. And we are very happy to still be on the same situation and partnership with both SBI and SCOR on that. Regarding Cartan is totally different in terms of region, actually. Cartan it's a project supported by SCOR. Tinubu provide also the system, help to design the product. But Cartan is much more aggressive and much more important project, where they hope to be the fourth credit insurer in Europe within 5 or 6 years. So the market is different, more competitive, mature market, but it's also a very exciting project because the different elements regarding the requirement for the system, for the processes, we were looking for a more digital, more automated project. So that was a challenge, but I think that it started quite very well, and we are still in the project and with the score. And I guess the other panelists can have things about it, but that was also a very exciting, different but exciting also project for us.
Thank you very much. Stuart, do you have anything to add about the Cartan trade venture? I'm sure you've seen and heard and been involved lots.
Yeah, of course. And speak holistically from an Aon perspective, we always like to see new entrants coming in who have a track record from an individual perspective of being able to deliver and serve clients. So that's been a good start. We've had some great successes with Cartan Trade. Typically, that's involved quite innovative solutions, some of which are syndicated with other insurance partners, which I think is a trend that we're starting to see more in the kind of short-term space, something that's probably been more relevant and prominent within the structured credit market. And what we're looking at now is the next phase of our kind of relationship and partnership with Cartan Trade. How do we start to scale that across different geographies that obviously are a priority for Cartan, but also where Aon are based?
Thank you very much, Stuart. And now on to our final section of this webinar, where to next? And I'm going to start question once again to Stuart with a question from the audience. Given that trust is paramount, even younger professionals must find new ways to quickly establish reputation and trusted relationship. How would you suggest, Stuart, that a younger, less experienced person actually goes about doing this?
Well, great question. I think this applies to many, many kind of facets and areas of business at the moment. Is how do you attract talent? How do you retain and develop talent within your organization? I think if you're coming in now, I think for me, it's about what I call best of both worlds. I think there's huge amounts of experience within the marketplace, but some of the new generation are coming in, they're much more intuitive around technology, around some of the kind of things we've mentioned today, like AI, digitalization. So if you can combine both together, is really learn from the experience that exists within the market, but apply the skill sets that may come more naturally to you. I think it gives you a great platform to succeed. I would add a kind of word of caution, however. I'm not going to name names, but I always think it's good to have some case studies that a former employee of Aon, for example, had huge amounts of skill sets and passion around AI digitalization, but sometimes didn't appreciate that you have to see that as kind of evolution at pace rather than transformation of the existing market.
Thank you very much. Evolution at pace versus transformation of the existing market. I might steal that one off you, Stuart. Carmine, I guess I could probably say you're the more entrepreneurial one. So we'd love to hear on your thoughts on that question from the audience.
Yeah. Thank you very much because this question I really like. I was involved twice in creating new credit insurance in different markets, so it's very interesting for me. So, as I said before, building trust quickly, especially in a relationship-driven industry like credit insurance, is not so easy, especially for younger professionals that they may lack years of experience. So I think that those people they need to be based on several points. One is the leverage mentorship and networks. I mean that with partnership and mentorship from the industry veterans, they can involve people with a long experience in this sector and forming partnership with well-established brokers or insurance. I think that this point can help a lot. The second point for me is the people should demonstrate transparency and strong ethics. because this market is really based on that. When you are open, you are transparent and clear what you are going to offer in terms of products, you can easily gain trust. And a younger professional, they need also to differentiate themselves by offering simple, transparent products and with the clear communication. This is, for me, it's one of the point. Another point, which I already mentioned, is to develop expertise in a niche. So a young professional can become easily specialists if they will be focused on something specific. For example, they can be specialized offering product for SMEs, or they can specialize offering product for emerging countries. This can be easily for them to be involved, focused on that, and they can become specialized on this point quickly, let's say. You cannot be specialized on everything because otherwise it takes a lot of time. They can leverage, sure, on technology. So we already spoke about that. So the artificial intelligence, for me, it's very important for the underwriting point of view. So you can underwrite and take a decision quickly with the help of the artificial intelligence. And you can also automate some process like claims process. And this can show also to the market, to the people, that you can demonstrate competence and forward thinking. And this is very important. As Stuart mentioned, the young people are really based on the new technology, and this can be a very, very good point. Another point can be the offering of value-added services. So again, credit risk analysis, consulting, portfolio management. In this way, you can build credibility, and you can gain a position not just as a service provider, but as a really partner. And this can be, a different key in order to put yourself on the market. And the last point could be the using of client testimonials or early wins. So even if you have a small customers, you need to put in evidence that you succeed to have a customer. You can demonstrate the success. You can build a portfolio of satisfied clients, and those clients, they can talk with other clients, and they can bring you additional prospects, and you can this way you can build a very good track record. And let's say that when I talk about that, I talk about something that I realized twice in my career. This is why I have a lot of passion on that. So I did that with COFAS and with Credit, and I think that it's something very interesting. This market, this industry, what you can do, and this is why I'm really passionate about that. But I don't want to talk about myself. So if the people wants to know what I did, they can check and search on the net.
Thank you very much, Carmine. And one final concluding question to the remaining two gentlemen, Mark and Tobias. What really does excite you in terms of the future of trade credit insurance, particularly given some of the exciting technological developments, the discussions we've had around new market entries and lowering barriers to entry? What are the most exciting things for you for the future of this industry? Tobias, I'll start with you.
Yeah, thank you very much. It's also linked to the question which you have been asking to Carmine and Stuart earlier. So I personally, what I still find interesting and extremely stimulating is that this line of business is linked to everyday's life. It is linked to the economy. It is linked to the development of countries, the political development of countries. It is a global industry, and all of that is adding to the thrill of this line of business. It's a very purposeful line of business. It's facilitating trade, and so I think that is something which still excites me about it. There are so many things still to be done in so many markets in terms of these lines of business. Then, I mentioned in the introduction that I started my career as an actuary, and I was and a colleague of mine told me about this line of business. And so what I liked about it is that the risks are really being managed, so that is an active management of the risks. So you're very, very close to the economies, but also in terms of, if I can call it, the mathematical approach of how to model these risks, I felt it was very elegant and intriguing. And I think this is even more so the case today with the advancement in technology. And I see that there is a huge potential in further, growing this line of business, also in terms of these service added values and so on and so forth. For me, it is still the most interesting. I'm working in a reinsurance company, and it is still the most interesting line of business I can think of, working for reinsurers, with all respect to my colleagues doing other things at SCOR, of course.
Thank you, Tobias. And Mark, final remarks, over to you.
Final remarks. Actually, everything has been said on this last point are truly true. Tobias was talking about the real world and trade credit being very close. Actually, one of the words in trade insurance, it's trade. And trade is human, it's very local, it's very cultural, and that's why it's always interesting, and that's where you will have creativity to try to find the coverage or the financing. And there's some room, not so much, because as I say, the evolution of the products themselves in trade credit has not been huge, or there's been a slight elements, but you need creativity to try to upgrade or to answer a specific either contemporary requirements or something to evolve. In terms of market, we've seen that there's some blank zone or almost blank zone to be covered in the future, and that's a very exciting also challenge for insurer, reinsurer, and ourselves to promote and to support some project. So that's still an open field, and working for industry which is not very well known everywhere, where the big organization have to lobby and to publicize about it. That's very interesting too, because you know that you will have to carry on, and it's open, even if it's a very small niche compared to the property casualty insurance, for instance. There's still many things to be done. There's some elements that people are looking to. There's some final note to be cut in the processes. So that's a very exciting, both on the market, on the business, on the craft, and on the technology.
Thank you, Mark, for that upbeat conclusion. And we recommend you download the Tinubu's latest white paper launching a new credit insurance venture, which we are flashing up on the screen now. And please note to all of our audience, this webinar will be available for reviewing after it's up and will be uploaded onto the Trade Finance Global website. Thank you to all of you, the audience who have joined us and listened in to this webinar from all around the world. And of course, a huge thank you to Stuart Lawson at Aon Credit Solutions, Mark Mayer at Tinubu, Carmine Mandola, former CEO at Crediarc, and Tobias Porval at SCOR P&C for joining us in this very exciting discussion. Thank you very much. Goodbye and good night.